Hello, hello, hello. Attempt number three to make this video. I apologize to those of you that tried to watch my previous day trading indicator videos and had the audio issues. And thanks to my subscribers that reached out and gave me a comment and said, hey, there's no audio here. Um, so hopefully this one is going to work and you won't have any issues with the audio. This video is about my day trading indicators, the indicators that I use every day. Now, there's something that's not on this chart, which I also use, and that is my intraday trend lines. I've done a whole nother video on that. You can go back and find that and watch that. That's not going to be covered here. This is just going to be the canned indicators and one custom built that I built in PineScript, but it's just the canned indicators that for the most part you can go find in TradingView and bring up on your chart. We're going to start at the bottom of the chart down here, and this is volume. It's just a standard volume indicator. That's all it is. If uh, if the bar is green, it was a green candle. If the bar is red, it was a red candle. It's simple as that is. I only use this to basically identify for me when a move is either gaining steam or when a move is losing steam. If it's gaining steam, the volume bars will increment larger. Okay. If it's losing steam, the volume bars will decrement smaller. And so that's pretty much all I use the volume for. Um, some of you may use it for other things, and that's fine. That's what I use it for. The next thing up on the screen is VWAP, volume weighted average price. And this is probably one of the most used indicators in all of day trading. So it is very well respected from the simple fact that virtually every retail trader is looking at VWAP. And so if the price comes into that, you can bank something's going to happen, either a reversal or if it goes through it, a big continuation in the same direction. And that's the only thing I use VWAP for. I mentally, it's kind of a level of potential reversion to the mean. And what I mean by that is this: if the price action has gone nothing but up all day long, there is a possibility that towards the end of the day, towards the market close, the price action may revert back down towards the VWAP. Or if it's been going down all day, there's a potential that it may revert back up towards the VWAP. If the price action comes into the VWAP, then I might use it, depending on the circumstances, as an entry for reversal, or I might see if it breaks that VWAP going down and how strongly that break is, and consider getting in for a further move in the same direction. That's all I use VWAP for. All right. Now, the next one I want, next series of indicators are these moving average indicators here, and they're very simple. This green one, the blue one, and the red one. They are all 21 period weighted moving averages. Now, they are weighted moving averages, or WMA, in TradingView. All right. Now, there's exponential moving averages, there's simple moving averages, there's volume weighted. I mean, there's all kinds of different moving averages. The ones that work best for me, for my strategy, and for the way I approach the market are the weighted moving averages, and all three of these are 21 period moving averages. What makes them different is what they're calculated off of. Now, a standard moving average by default is calculated off the close of the candles. That's the standard default. If you put a moving average up and all you do is change the period, being it 20 or 9 or 50 or 200, and you don't change anything else, then that moving average is calculated off of the close of the candles. So the difference in my moving averages is this: the green 21 period moving average is calculated on the high. The blue is calculated on the close, which is the standard moving average, and the red is calculated on the low of the candle. And so that's the only difference. Now, what this does for me is it gives me a channel of price action. Many people just use that single, in this case, 21 period moving average. And if you're used to that, if you like that, if you're comfortable with that, I'm not here to tell you to change it. I just found that when the price action gets closer to this close measured 21 period moving average, it gets a little fishy. And so, through my research and I've been trying to trade for 3.5 years, I've found that this channel of price action works very well for me. And it works well in many cases, very, very well. Like, for instance, in this move, if I had been watching in this move when this pullback came, when the price action came back into this high side, I would be keen on getting in for a reversal back up. Okay. But then if you notice, the first time it comes down, it kind of touches the high side. It bounces back up. The next time it comes down, it plays around the middle or the close, and then it bounces back up. And then the next time it comes down, it goes and kind of plays around on the low, and then back up here, and it goes further down to the low. And now I had in my mind, I actually took a couple of trades in here earlier, and my thinking was it was going to flush, and it just so happens that I just missed this gigantic flush. So it comes to the high, then it comes to the close, then it comes to the low, then it many times just flushes through it. Okay, so that's how I use my moving averages here, the 21 period weighted moving averages off of the high, the close, and the low. All right, and then the next moving average is this shaded area here, and I use this as a hot area up here and a cold area down here. Okay, what this is actually another moving average. It's just displayed differently. This is the 40 period moving average. And you're saying, why the crap do you have a 40 period moving average? Well, I have come to trust and believe that the 200 period moving average on the 1 minute chart is a very well respected level for day traders and intraday traders. Well, the 200 period on the 1 minute chart is 200 minutes of price action. Well, I trade the 5 minute chart. And so with the 5 minute chart, how do I calculate what the 200 period moving average on the 1 minute chart is on the 5 minute chart? And it's a very simple calculation. 200 divided by 5. And that gives me 40. So this shaded area is representing the 200 period moving average on the 1 minute chart, but it is set on the 5 minute chart as the 40 weighted moving average. Now I'm going to show you how I got this shaded area. Okay, here's the actual indicator right here. And if we go to the settings, you can see, like I said, here's the input. It's a 40. It's on the close. I didn't change any of that. But the style here, you can see right here, if by default, this is always on the line setting. For me, I put it on the columns setting. Columns, and then in the color, I varied the opacity. I gave it a color that I thought was decent, that wouldn't confuse me, and then I varied the opacity. So if I bring this all the way up here, you can see that, hey, that's some pretty interesting stuff there, right? But I didn't want it. I don't want it to interact or influence my visibility of the price action. So I brought the opacity down. And now I've got this shaded area that represents the cold zone. This is the cold zone. So I got the cold zone, I got the hot zone. Now you can see this thing's coming down here. Now in my And my strategy here, if this wasn't towards the end of the day, which I normally don't play the end of the day, I'd be looking here as it broke into this cold area. I might be looking to get in shortly after it breaks into the area. If it holds, I might look to get in for a further short scalp. That's how I might use this shaded area. Now, that's the indicators that I have on my chart. The other indicator that I used to have below the volume was the 2-period ATR. Now, again, the default on ATR is the 14 period. If you just put ATR on your chart, it's going to be the 14 period ATR. That's just the default. I use ATR for something a little bit different. Now, instead of having the indicator down here, I built a custom Pine script, and it displays right here. Okay, and so I built this custom Pine script, and on the bottom row here, you can see this is my 2 ATR value on the 5-minute chart. And you can see it's 21.5. What I use the 2 ATR for is primarily at the open when I'm playing my open play strategy. And it is to give me a level for a potential profit target. Now, there aren't any like specific hard rules. I may set a profit target based on the 2 ATR. And in this case, if I were to get into this trade, I would set my profit target at 21.5 points below my entry price. Or depending on the presentation and what I'm seeing in the price action, I may say, okay, I'm going to set my profit at 10 points back from the 2 ATR. So in that case, I would set my profit target at 12 points. All right. And that's all I use the 2 ATR for. So those are the indicators that I use. Now, this custom script that I've got together has a few other things on it. It has a section here that tells me when the high is set for the current candle and when the low is set for the current candle. Now, I normally only use this for my open play strategy because as part of that strategy, I'm looking for a quick pullback in my entry candle or my execution candle before I get in for my trade. And so I'm looking for this to say, like for instance, if this goes down, you'll see low. Right now it says low is set. If that goes down further, it's going to say uh, uh, setting a new low or something like that, or making a new low, right? But right now it's set because the threshold for this is 12 seconds. If the candle doesn't make a new high within 12 seconds, it says high is set. If a candle doesn't make a new low in 12 seconds, it says low is set. And right now you're seeing it says moving lower. Oh, look, now it says, oh, it's moving lower. So it's moving now. And if that doesn't set a new low in 12 seconds, it's going to go to low is set. All right, and let's see if it does that. Low is set. Okay. Now, it's a very fluid indicator, and I wouldn't encourage you to play around with it um, outside of a paper trader account, a practice account. I really think you need to focus on that. Okay. And then the top one up here is the current candle size, and that's a measure from high to low. The current candle, high to low. And what this tells me is the current candle size in relation to the 2 ATR. If the current candle size is much larger than the current ATR, then that's something to at least be aware of, to consider, um, because it's in a growth period. If it maintains that, it's in the growth period. If the current candle size is below the ATR by a large amount, then it might be in a contraction period. But that's all this is. This is a custom script. Now, I've gone over all my indicators, and if this custom script is something you'd like to play around with, let me know in the comments down below, and maybe I'll do a specific video on that and put the script in the description of the video if you're so inclined. But outside of that, that's it. That's how I play. I hate that I missed this move because I was kind of battling back today from some losses in my prop firm account. But that's it. Those are my indicators, and I use those religiously because I have come to trust in them to the extent that when it comes time to make a decision based on them, I have very little, I have very little reservation about it. And if you're working on your indicators, trying to figure out what works for you, that should be your litmus test. Use indicators that you trust. And when something happens in relation to those indicators, you can make a decision very quickly, very easily, with a high level of confidence. Okay. Outside of that, I'll see you on the flip side.